The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We have retail sales this morning down 0.9%. A surprise to the downside. The markets pick up. We have yields pulling back a bit. We got the NASDAQ 100 negative by about 6 points right now, trading at 22,105, just above where we were at 8:30 coming in to that retail sales number. S&Ps. We charge higher yesterday. Right now, negative by just 1 point. You see the overnight session from 61.46 down to almost 61.20. There's your volatility at 8:30 on the retail sales, and we're a little bit higher coming into the open. Dow, volatility as well. Yesterday, we trade up 350 points. Overnight, you trade down 200 points, and just like that, we're up 44,767, negative by 45 points on the session. Bitcoin, 97,195. Crude. Now, crude, if you're looking at crude's got primary trading ranges, they would call them. $72.50 about is the upside, 72 to 72.50, and that's just an area that's been an area of support going back, whether it was August of 2024, May of 2024, turns into an area of resistance on a couple occasions, and yeah, we're bumping around $72 on crude, and the lower side there is $68 to $67. Maybe that's where we're heading. It seems to be that's where we're heading. Not even just maybe. All the pressure on the downside right now to crude. 10-year. So, look at that move on the heels of the retail sales number, right? We got weak retail sales. We're going to jump over to them. But as I said, on a monthly basis, you're down 0.9% in January. Much more than expected. So what is that? Retail sales are driving this economy to a certain degree. 10-year, just like that, 4.47%. Okay? The narrative there, of course, is, well, geez, everything is not as strong as you think it is. Maybe inflation isn't as large of a worry as you think it is, and maybe the Fed's going to be able to cut quicker than we expected just Wednesday on the CPI number. The dollar is probably the biggest move that matters today. Check it out. Extending the day that we had yesterday, you were at 108.5 on Wednesday. We just lost 2 full points. 106.6 is the handle right now on the DXY, and you take a look at this on a weekly, and you're now breaking below where you were on October 20 of 2023. Okay, this is a weekly. We've been chopping around. You break above it, we break below. That is a decisive break. Now, we had one back in November, and then what did we do? We traded higher. There's your daily breaking low to 106.70. And it was December 18th when I did it this morning. Yeah, we just took out this entire bar, right? Look at that bar. On December 18th, you traded up 1.5 points. And we've now gotten through that entire bar. The low of that bar is 106.82. We're at 106.71. You're right back to where you were November 14th. Now, what it's got to get through is the entire move that you made from 104 to 107 now, which was the week after the election for the dollar. But decisive move. And you kind of got everything lining up, right? You have political talk, peace talk, I should say, over in Europe. That on the heels with the tariffs get pushed back. And then you have a weaker economy, allowing for the Fed to actually potentially need to cut at some point quicker than the market had expected on a hot CPI number. All right, let's get over to the retail sales numbers. The headline: January value of receipts fall 0.9% after a solid holiday season. The market was expecting a decline of about 0.2%. Okay, so you get an upwardly revised 0.7% gain in December. But guess what? Retail sales, and they're not adjusted for inflation. We just got CPI. CPI inflation numbers are going up 0.5%. So even in the context of prices still rising in January, retail sales down almost a full percentage point. Excluding autos, sales dropped 0.4%. 9 of the 13 categories posted decreases, most notably the motor vehicles, which accounts for that difference from 0.9 to 0.4. Yeah, and you got some volatility where you're talking about the wildfires. You're talking about severe winter they put into here for retail sales. That'll slow things down, of course. Delinquency, yeah, becoming more common as borrowers face a third year of elevated interest rates. Delinquency. But there are the numbers. 0.9% and 0.2 was the number. Control group, yeah, down 0.8%. And they were thinking that was going to be up 0.3%. So a huge miss. The economy weaker than you expected on those retail sales. And I see the market just trying to digest this, right? Look at the volatility we've had. No real move whatsoever. We just got a huge downside surprise on retail sales. And that's not budging the market. You know what it's budged? It's budged yields. And it's budged the dollar. And we're now, I mean, if you had said on Wednesday, right, by the time we get to Friday before the open, you're going to be higher than actually the spike we got on the CPI, right? You're down at 108.04. The spike was 109.04. I'd say, don't worry. We're going to be a full point even higher in the 10-year by the time we get to retail sales on Friday. Hard press, but you did it, which is the type of volatility, and we actually have yields lower, 4.47. Seems like it's head fake into 5, but maybe 5's not in, man. As we've now been consolidating for the better part of almost 3 months at these levels. Spending at restaurants and bars, the only service sector category in Friday's report, rose nearly 1%. All right, and of course, there's going to be a lot of talk with bonds. Bond traders, stay on guard after this week's U.S. inflation scare. Well, check out. They're going to have to rewrite this article just that quickly, man. We'll pull up the yield curve in a moment, but we got a pullback going on in yields. And yeah, why not? We'll go to this one early in the program. You know, I always love game theory, right? I've played a tremendous amount of poker in my time. I love game theory, all right? It's gambling. The market, short term especially, is gambling, risk reward. And when you look at a game like basketball, okay, it's interesting how the game continues to shift from a game theory perspective. And you want to see how it's shifting towards three-pointers. In the great 80s, only about 3 attempts per game were a three-point shot. That number now is up to 37 shots per game. But here's the thing. We'll pull it up as well. I assumed when I saw this stuff happening that people were just shooting better from 3, but they really haven't. The league-wide average from 3 has not changed that much over the last 30 years, from 1992 or 94, okay? And yet, what have they figured out? They've basically solved it mathematically from a risk-reward perspective, where every time you shoot a 3, you're getting on average more points than if you shoot a 2. Maybe a layup counts, but it's changed the game, and they're probably going to have to change it. And we'll break down some of that math because it's interesting. It's sometimes the most interesting thing is don't be afraid to look at a scenario from a different perspective. It's like Moneyball, right, in baseball, but it seems like the three-point shot's a little bit easier to solve. And why did it take so long? People just are afraid of change sometimes. They should have been hucking up threes for the last 30 years. They are now, and they're going to have to work on that. S&P's negative by 1. Stay tuned. We're coming back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps negative by 1, NASDAQ 100 negative by 7. Now we're coming into a long weekend as well. So markets closed for Monday for President's Day, Washington's birthday. We're closed Monday, February 17th. So yeah, we're coming into a long weekend, and don't be surprised if we get some fireworks today, man. We're coming off CPI hot, PPI hot, retail sales weak. Chairman Powell in front of Congress, 2 days. The market digesting a lot of data today in the face of potential tariffs on top of everything as well. But yeah, going back because, you know, a lot of things is risk reward, folks. You take this, you should be trying to apply similar principles when you're talking about a simple expected value, okay? And this is what's great, okay? In poker, they have this term all the time. It's what's your EV? Are you plus EV? Are you plus expected value? And what that means is if you run this sample 1,000,000 times, now it's on you to analyze the sample, right? If you're putting in the right variables, if you're correctly assessing all those variables and the probabilities on the long term that you're basing them on, then you're going to get a proper EV. And if you're betting $100, what's your expected value outcome? If it's above $100, then you should take that bet all day, right? And what you look at in the NBA is why did it take so long to solve such a simple equation? And when you check out the equation, so here are the 3-pointers, okay? It is just broadening your mind, not being afraid to make something. These teams should have been popping up. And yes, you have your superstars like Steph Curry. But when I saw these stats and I dug into it, I was actually, well, why did it take so long? Now, here's what I'm talking about, all right? I had assumed that the game was changing because people were adapting and able to shoot from the arc better, and that's just not the case. All right, you look at the 3-point percentage on a decade basis, it was at about 35% in the 90s. So yeah, in the 80s, they weren't there. It took them 10 years. Since then, you're at about 35 to 36%. Not a real discernible difference, okay? And what I like that this Bloomberg article breaks down is, tell me the exact expected value for every 3-point shot that I put up. Well, if you're shooting about 33%, then you're going to hit 1 out of 3. Then that means every time you shoot a 3, you're basically, your expected value is 1 point, right? You're going to hit 1 out of 3. Every time you hit 1, you're going to get 3 points. The other times, 2 times you miss, you're going to get 0. On the average, you get a point. If you shoot a mid-range jumper, where's the numbers? Here we are. NBA players make 36% of the shots. I just showed you the numbers, right? They get 1.08, so it's even better, right? If it was 33%, 0.33 repeating, they get 1. They get 1.08 points per an attempt every time they throw it up, assuming it's a good attempt. Or it's a reasonable attempt. It's an average attempt. That's the average, right? For mid-range shots, you're only getting an expected value of 0.8 points. Why didn't a coach in 1991 see that and just have 5 guys standing outside the arc, which is what they have right now? Now, I know the game's changed. I know it's mattered there, okay? But then the last one, I don't know, where's that graphic? Oh, shame on me. Did I just do it? Here it is. Perfect. And this is how the game has changed as a result of it. On the top, you have what the shots looked like in the year 2000 in the NBA. And this is literally a graph of what now you're going to get some shots in here, okay? But that's what the game looks like because nobody's throwing it up in the middle because it makes no sense. Now, just from a trader's perspective, the way I bring it up is pretty remarkable it took that long with the stats that are there, right, to convert. You're telling me every time I shoot a 3, I'm getting 1.08 points on average, and they're taking 90 shots a game, and every time I take a mid-range shot, I'm getting 0.8 points. So use that in your trading sometimes. Let's jump around to some of the Magnificent 7. Apple shares. You're going to be a little bit lower on the open. You get the S&P's creeping into positive territory right now. Amazon slightly in the red. We were above 231. They faded a bit to 229.49. Microsoft slightly in the red. Meta continues the run. Are they going to do it today? Well, they're going to start from the red. Meta off by about $3. They close out, was it 19 or 20 sessions in the positive yesterday? Remarkable. NVIDIA slightly in the green by about $1 right now. And Tesla up by $6, trading at $361. We jump over to Google shares. Google trading at about $187, almost up to $189 overnight. Some other chip players, Intel having quite a week. Positive again by about 50 pennies. And 50 pennies on a $24 stock. You're trading at $24.59. Check out the daily on Intel. Yeah. You're coming into this gap from 6 months ago, right? That gap closes at about $29 to $30. You're bumping up against this area on Intel. But look at this volume. That's what you like to see, man. Look at that volume. And that's what you're going to need to break away from this area that you've been in since August, right? To get above this area. You need volume like that. Look at that volume on a daily yesterday. 248 million shares to 24.13 for Intel shares. You know, you look at the market, it's not quite the same scenario, man. And there I said in the chart, that ES volume, okay, this is a daily, but check this out. You put it on a weekly. I mean, look at the volume. From the week we had January 27th, on a weekly basis, 8.6 million contracts in the S&P futures. You do 7.4 last week. On the rise that we've had this week, we've done 5 so far. So probably hard-pressed to do 2.4. We'll put it back to a daily. And you see that open interest right now at 2.1. But yeah, you'd need a number that dwarfs anything we've seen since December 17th on volume to put this just on par with what we got last week on volume, because you're so light. You're coming into today with 5 million. Last week we did 7.4. Week prior you did 8.6. And all we've really been doing is shopping around where we are December 2nd. Huge volume pullback the week of December 16th. The largest day there, the 18th. There it is on that pullback. And what have we done? We've really traded to the top of that range without much strength. And that volume trailing off even more so since February 3rd. You're talking about 11 days ago. Look at that volume decline, and we'll see where we get to today. But nonetheless, we got S&P's flat, NASDAQ 100 negative by 0.5%. And, you know, you jump back to the VIX. How about it, man? We got a 14 handle just to end the session yesterday, 14.98, and that's where we're going to kick off right now as the market's going to trade to positive territory as we come into the open. You can talk about it. Let's check out gold. So, interesting that you have the dollar collapsing and we don't have gold to all-time highs, right? We got a dollar that's trading at a 106 handle right now, and you're just back at 29.47. But all things considered, it's going to take a little time. But that's going to be the window you're back in gold, and gold looks like it's on its next run, man. 3,000 to 33.50. 3,000 is going to be the first stop, next round number, but 33.50 I think is coming, man. We broke above this B point in a one-line straight move since December 20th. You got gold up by $2 right now. Silver, though. Silver, this could be maybe, I found myself this morning checking out silver. Check out the move in silver. Yeah, check out that move in silver today, right? Up $1.25, up almost 4%. Silver breaking away, breaking into the highs of last October. Stay tuned, folks. We're coming back for the opening bell.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, and yeah, Rahul, how about that Roku, man? Up by 18.2%, and they're still losing money, but they're losing less money than the market anticipated. They lost 24 cents a share. Market was looking for a loss of 40 cents. They recorded $1.2 billion in revenue. Market was looking for 1.15. Now, this thing has been a roller coaster, man. Look at that. 3, is that, yeah, look, there it is. That's go public in 2017, the COVID pullback, to $58.22. You trade up to $4.90 twice. You pull back to lows of $38 at the end of 2022. We put it back to a shorter term time frame. And just in August, we were trading at $48, and boom, just like that, you double. Now we're bumping up against this area we had in October 2023. And really, you'd like to see some more volume. We're going to have some volume today, but look at these volume spikes that you had back in 2022, 2023, the volume spike you had a year ago to the downside in February, and we're just above that level. So anybody that's been in this in the last couple of years is now in a profitable position. But you're going to have buyers that are stepping in at $100+ up 19%. But yeah, seems like they're probably on their way, which is what you get a move like this at 20%. That's a move that makes sense in the future. They're seeing that negative, that loss go to a profit when you're beating on revenue. And let me tell you, in our house, okay, I got Rokus everywhere. I got Rokus in every house. We don't have every room. We don't have cable, not every room, not in my office, but the 2 bedrooms and the living room. We got Rokus. That's how we access everything we do. And, we watch Roku Live occasionally. And, yeah, you go from there, right? All right, S&P's up by 1, NASDAQ 100 down by about 5. Oh, we're up by 5. The market oscillating, trying to figure out where we're going to go. A little bit of volatility on the opening bell. Dow off by 63. And other equities, Moderna down by about 3%. You jump over to Moderna numbers. Losses more than expected as they scale down manufacturing. Net loss, $1.12 billion. How about that? That compares to a net income of $217 million. The quarterly loss includes almost $238 million non-cash charge to ending a contract manufacturing agreement. Imagine that, you got to pay $250 million to get out of an agreement. But hey, when you're doing the types of deals they're doing, and they reiterate their guidance, but yeah, lower by about 3%. They slashed their 2025 sales guidance in January by $1 billion. So the writing was kind of on the wall there. And the loss is larger than expected, even with a revenue beat. Apple with a little bit of a lift on the open. Microsoft down 0.6. Amazon down about 0.6% right now. NVIDIA catches a bid up by 1%. All right, what else we got? Airbnb. Strong numbers last night. You're up by 14%. How about that one, man? 73 cents a share on $2.48 billion in revenue. DraftKings out with their numbers. They are making a lot of money, man. DraftKings up by 8%, up $3.72. And yeah. How about $6.3 to $6.6 billion in full year revenue? Just above where the market was basically expecting. Longer term, look at that. Yeah, we just broke it. And, you're bumping up against this $50 to $60 area where you consolidated from the end of 2020 to the highs back there in 2021, spike high of $74. But boy, looking at this chart, you got a little volume since you've been here, right? You trade up to $50 in March of last year. You back it off to under 30. We've made that move again. Well, look at that. That's probably where you're heading, man. A to B, C to D brings you back to about $67, which will be testing the highs you had in 2021. Gambling is alive and well, and it's going nowhere, folks. A lot of money. Hopefully it's taken out in recreational purposes, because the one thing that I look at in that, right, and, coming from a poker background of substantial history, poker's a negative sum game. You break even, you're losing money from the rake. Okay, that money has to come from somewhere for the rake. For instance, the World Series of Poker. Imagine this, right? World Series of Poker gets about, let's just say 10,000 people for simple math. I think it's 8,000 or 9,000 people. And they're putting up $10,000 each, okay? Usually, that prize pool goes something like a 2% vig. So $9,800 might go to the prize pool. $200 of your entry goes to the house to run the tournament. And then you can tip the dealers on top of that. Sometimes they take out rake for dealers. Sometimes they take out rake for a jackpot drop, etc. Especially the Indian casinos. They can rake more, have different rules, of course, down here in Florida. But the point being, the rake, imagine this. So just to run the World Series of Poker, $200 per an entry, right? You got 10,000 players there, okay? 10,000 players, right? Paying $200. You're talking about a couple $1,000,000 to run that tournament is what they take out. So what do you have to do? You have to make up that rake yourself. The point being, DraftKings, $6.6 billion is what they're taking out. That's a lot of money for sports gambling, for recreation. You can do a lot with recreation for $6.6 billion. It's going into sports gambling. And hopefully that people aren't getting, it seems to be coming from a background, again, where I've been exposed to that. Now, I was in poker, okay, which I liken to trading. You've heard some of the biggest, quant trading firms out there, they'll teach poker, okay? They'll look for that because it's a game theory of risk reward, which applies to market principles. And what it lends itself to, though, in gambling is the crossover to negative expectation games. We're going full circle in the beginning of the program. Poker, if played correctly, just like trading, okay, is a positive expectation game in the long run. Short run, it's basically just prone to luck, right? But long run, and trading, you can play a similar, but then you get into the expectation of any game that the casino is running, unless you're counting cards, is a negative expectation game. And I've seen how people get sucked into that, folks. And the sports gambling side, there's probably a lot of money going there. And I think, you can't protect people from themselves because you can put small limits, folks, but that's where the nuances are everything. And I know I'm sorry, but being in poker, I've seen both sides of it. And the sports gambling side of things, I'm all about buying squares on the Super Bowl. I'm all about $50 on Sunday. One of the things that I advocate for poker, for online, the reason why online poker should be legal is you can go online, folks, and play a $2 or $5 poker tournament, right? And sometimes I'll do that because I just enjoy the game and I want to relax and I don't want to stress out over the money. And sometimes I've played very expensive tournaments where inevitably, of course, you're going to stress over the money. Anybody would for the amount of money involved. You cannot go down to a casino and play a tournament and play some fun poker realistically without risking hundreds of dollars if you're going to play it properly. Cheapest game is 1-2 no limit, and yeah, you can buy in cheap, but you should buy in with about 100 big blinds, $200. So, DraftKings doing well. A little bit of a we digress, to put it lightly. $6.6 billion potentially going to DraftKings over the period of a year. A lot of moolah. Markets flat, S&P's up by 3. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps up by about 4 points right now, climbing towards the high we had overnight of about 61.46. NASDAQ 100 slightly in the red, off by about 11 points. Dow up by 15. Russell up by 13. So great question in the YouTube Tigers Den saying, how do you know the online game is not cheating? You don't, first of all, okay? But you never know that in any game, folks. How do you know that the stock you're trading, that there's not an inside manipulator, right? How do you know that the stock that you're shorting doesn't have a Bill Huang on the other side, right? That's rolled up in illegal fraud to massively increase their exposure, right? Markets can be manipulated in the same way that any risk game can. And the reason why I stress that is you never want to get your losses ahead of yourself. Okay, and I'll tell you a quick example of how this works out, because online there's many risks, and I'll tell you, people collude. They are bots. Poker bots are everywhere online right now. Okay, and you cannot beat a bot in the long run. Period. Don't tell me you're smarter than the smartest computers out there when they're solving decision trees that have thousands and thousands. Okay, but here's an example of what did happen with poker. You have risk with the sites themselves. Okay, years ago, somebody created a backdoor for themselves for a poker site called Ultimate Bet, which was huge. And the motto of the lesson here is what that person did is, number one, greed is always present, because they basically could see everyone's hole cards, and if they just played in a reasonable fashion to not set off any alarms, they wouldn't have been noticed. But instead, they played basically revealing that the only way somebody would play the way they played for the amount of money they were playing for, which was life-changing money, in ridiculous fashion outside of the fact that they could just see the cards. And nobody understood how, but that's what the numbers do. And online poker, okay, here's the other part of this, right? Because online poker is something that has data that is trackable, okay, and many people, that you have the history of the hand histories themselves. The reason why that cheat was found was because they analyzed the data, and it was a statistical anomaly how this person was playing versus how much they had won, right? And the kicker of this all, another lesson that translates, and this is why, man, there's nothing like, having experience, okay? Because having seen how this played out, in the heyday of online poker, you had many young men, okay, and women, but mostly young men, who had made massive sums of money. Some of them had 500,000, 100,000 sitting in their poker account, okay, 800,000. Some of them had millions. And what happened is, when this account came about on Ultimate Bet that was playing so horribly, what these players did is they overexposed themselves on a risk basis to one player. And for your question, EKS, right, you never know. And what these players should have done was said, you know what? I'm not going to expose myself to one player because this could be the instance that the game is not fair. Because what was happening is that they were playing this player, and he was playing horribly, and he kept getting lucky and winning all their money. And what did they do? They kept saying, well, I can't stop now. I just lost $20,000 to this guy who's never seen a poker table, it looks like, from the way he's playing. How could I stop now? I have to chase my losses. This is the most profitable poker game I'll ever play in. And what did they do? They basically chased their losses till they lost their entire bankroll to the player because they couldn't believe that they could lose on a long-term basis to this player. And meanwhile, they were getting cheated. So learn that lesson, right? Never put all your eggs in one basket, as they say. And you see it happen over and over. And there's a lot of people who lost millions over that time. But it happens in markets too, right? Think about Bill Hwang, the equities he was getting into, the fraud that was taking place, and the collapse that ensued. You could be in that equity knowing that you're right, the markets are defying it, and understand that you don't always have everything in place. So don't always put those eggs in one basket. Yeah. All right, we jump around. Whoop, what are we doing here? Let's jump around to other equities. We jump over to Coinbase in crypto, down about 5% in Coinbase as they're out with their numbers last night. And yeah, $4.68 a share on revenue of 2.27. The market, yeah, they beat, but boy, they must have talked about something in that earnings call because they are trading lower. Pulled back longer term. I mean, quite a run with crypto, but pretty remarkable. They pushed this thing out to the public, and you never even come back to that price. Now, remember, folks, when they pushed out Coinbase to public, and this thing traded to $4.29 in April of 2021, Bitcoin was only at 60,000. Okay? I say it consistently. If you want to get into crypto, there's no reason to get into Coinbase. Pick your crypto and get into it. You got enough volatility in the crypto themselves. You don't need overexposure to the likes of MicroStrategy or now Strategy. Yeah, Palo Alto with their numbers down about 5% or $10. You came into those numbers with pretty lofty expectations of about 200, right where you were about a quarter ago when they reported as well. But Palo Alto down about 5%. Yeah, and they're light on free cash flow, man. $509 million in free cash flow, and market was looking for $694. AMAT down 5% as well on their numbers. Softer than expected revenue outlook that overshadow the quarterly results, as CNBC puts it out there. I feel like we're going to get some volatility today, preparing for the 3-day weekend. We got yields pulling back. Look at that dollar continuing to dive. 106.58, down by 2 full points from where we were just about 48 hours ago to 108.53. We got weak retail sales. You have yields pulling back. Let's see where we're sitting on the yields. So the 2-year down about 5 basis points. That's a huge move. The 5-year down 6 basis points. The 10-year down about 5 basis points. 4.7 is the number, though. But, man, that 2-year. You jump over to the CME Fed Watch. We were looking at this yesterday. Let's see how we get an update today. Yeah, pretty close. The last time we were going, let's see. All right, they upped it. Now the highest probability first comes in July. They're thinking maybe the market comes in with a cut. But as early as June, you almost got a 50-50. So the market's saying, hey, guess what? In 3 meetings, we got a 50-50 shot of a cut. And those retail sales, we'll see. There's a lot of volatility there. You're dealing with a lot of severe storms in the Northeast, and you're also dealing with those fires, and maybe that's enough to bring a little negative volatility to retail sales, but the market liking a little bit of a pullback in yields, and the market liking the fact that, hey, you know what? Maybe we will get a cut at some point later this year. S&P's up by 5, NASDAQ 100 up by 17. One more segment, folks. Don't go away. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV.
Welcome back, folks. We take a look at Amazon, down about 0.5% right now from $81 to begin 2023. You take a look at Walmart, and Walmart shares begin their run in December 23. Now, here's the kicker, right? I bring this up because Walmart's stagnant from where it was in 2022, but basically traded flat in the year 2023. This is where you got to check the data sometimes. And I agree, Walmart's great. I own some Walmart, I own some Amazon, long-term, folks, okay? They're two giants. They're competing in a great way, and they're probably making themselves better on the retail perspective of things. And Amazon's got AWS that's kicking butt as well. Share price performance of Walmart. Now, this is going back. Why do they go from March of 24? It's an arbitrary number. It's February 25. What do they... Oh, no, good. They went back a full year. I just saw March. Okay, so they go back in exactly a year. It makes more sense. The thing to consider, though, folks, is that Walmart's up 80%, but they've caught up over those last 2 years. Amazon just traded from 180... from 80 to 240. Okay, but they're both there. They are. And this is talking about the lag and the catch-up, and I think the catch-up is real, man. Yeah. And it has to do with people who are making money that weren't normally going there, but now that everything's online, they're just competing on price, and they're doing it. And they're doing it in a way in terms of the process is getting things done. And yeah, Walmart Plus memberships, 3-month rolling. How about that, right? From 4 million to 25 million. They got a lot of room that they can go for Walmart Plus when you compare it to what a company like Amazon has. And I like them both. But keep your eyes on Walmart, man, because I think they have some room to go even from here. Longer term, look at this thing, right? Quite a rocket ship, but when you compare that, 25 million, they can go bigger, man. They can. If you listen to this program, you've heard me talk about my Sam's Affinity. Only because I'm not near a Costco. I'm sure they're competing. Folks, thanks so much for kicking your Friday off right here. I'm going to come back for the 10 o'clock update. And then Basil out today. We got a replay. But after that, we got live programming, folks. Stay tuned. Steve Rhodes, Fast Market. Larry going to be doing his program at 1 o'clock, even though Larry's doing live trading right now. You can still get in there. Have a great weekend, folks. Have a safe weekend. We'll see you on Tuesday. Have a great one, folks.